Hey everyone, welcome to my new video, and in this video we are going to discuss about fundamentals of swing trading. So I was going through a lot of videos on YouTube, and what I found surprisingly is most of the videos just cover the theory aspect of it and very few actually talk about the practical aspect. So I thought, why not I make a video where I also try to cover the practical aspects of swing trading. So we do a lot of future trading, we also buy a lot of stocks based on momentum. So all this is just based on a concept called as swing trading, which I'm going to dive deep into in this video. So this video is for beginners, and in case if you are a full-time trader, I'm pretty sure this video is also going to help you brush up your concepts. So now without further ado, let's quickly get into swing trading. So whenever we talk about swing trading, the entire concept of swing trading revolves around technical analysis, right? So when I say technical analysis, I don't mean indicators and a lot of other chart patterns and all of that. I simply mean support and resistance. Buffett very cleverly says that finance as a subject is pretty easy, but people want to complicate it because if they keep it simple, they won't be able to sell anything, right? So similarly, something like technical analysis or something like swing trading is also quite simple. So people try to complicate it with different indicators, different chart patterns. So there are so many chart patterns which I don't even know, right? So I'm still able to trade without knowing these chart patterns or indicators. So that is because when something gets really complicated, it's easy to sell. And to be honest, you don't need any of this to actually learn the concept of swing trading. So I want to keep this as a beginner's guide. So I want to explain from the basics as to what exactly is support, resistance, and also when you can buy, when you can sell the stock, how to have a proper risk framework, and how to plan our trade. So now let's quickly get into this video. And as I told you, I'll try to keep this video as simple as possible. And the only thing we'll be using in this video is simple support and resistance. So first, let's start by understanding what is swing trading. Swing trading simply refers to buying the stock today and maybe selling it after a week or after a month. So you basically hold it for a short span of time. So it can also be 3 months, sometimes it can also be 6 months. So when you get an exit, you end up selling the stock. So unlike intraday trading, where you buy the stock today to sell the stock the same day. So if you are buying the stock in the morning and selling it by the day end, so that is called as intraday trading. But when you carry the positions for days longer, it is called as swing trading. So when you're doing swing trading, so a lot of stocks are actually available for you to pick. So if you take a whole basket of BSE, there are close to around 6,000 to 7,000 stocks available. So obviously you can't go and try to screen each stock and find which is good, which is bad. So the basic concept of swing trading is trying to find stocks which are having a good momentum. So now let me give you a simple example to understand what kind of stocks we will be actually screening when we actually want to enter swing trade. So now let us say there are two cars, right? So one is a BMW and one more is a Maruti. And now there is a car race which is going on, and both BMW and Maruti are actually standing next to each other. So which one are you going to bet on that this particular car is going to win the race, right? So most obvious answer for you would be to bet on BMW. Why? Because you know BMW is relatively much more faster compared to Maruti. It is not that Maruti cannot move forward. Maruti is definitely going to move forward. But when you look at relatively, BMW is much faster, much more powerful than Maruti. So it is an easier choice to bet on BMW rather than betting on Maruti. So why exactly I'm talking about this? So let me just show it to you. So to understand this better, let's take a look at two stocks. The first stock is L&T Mindtree, which is a mid-sized IT company. So the first stock which we are going to look at is L&T Mindtree, which is a mid-sized IT company. If you see from 2021, you can see the stock has barely performed. It was around 5,000 level in 2021. Even after 2-3 years, the stock is still at 5,100 level. So even though the stock had gone up till 7,000, right now it is trading at 5,000. So now I'll be showing you one more mid-sized IT firm called as Persistent Systems. So Persistent Systems is also a mid-sized IT firm similar to L&T Mindtree. So one thing what you can look at here is the stock initially rallied in 2021, then consolidated, and now it is making a fresh all-time high. So now if I were to ask you, which is relatively stronger? Is it Persistent System or L&T Mindtree? So the simple answer is Persistent Systems, because you can take a look at this particular chart. So right now the stock has not just recovered from its peak in 2021, but it has also made a new all-time high and it is trying to go higher. Whereas L&T Mindtree is still struggling to get back to its all-time high of 7,500 in 2021. It is almost 30 to 40% away. So now you might have got a clear idea on how exactly you can end up picking stocks with relative strength. I'm just going to show you one more quick example. So let's take a look at Kotak Bank. So when I open the chart of Kotak Bank, you see from 2021, the stock has really not gone anywhere. So it was trading somewhere around 1,700. Even today, it is trading somewhere around 1,700. Alongside, I will also open one more banking sector chart, which is of a similar size, and it is Axis Bank. So what you can see here is I am choosing the private bank itself, and I am also choosing banks of similar size. So one thing you can see in chart of Axis Bank is the high which it made in 2021 was not just broken, but right now also the stock is almost trading close to its all-time high. So again, if I ask you which stock do you think is relatively stronger, the simple answer would be Axis Bank, because the relative strength is clearly visible on the chart. So it is not that tomorrow Kotak cannot become relatively stronger. It is just that today Axis Bank is looking more stronger than Kotak. So you can see here we are not looking at any kind of fundamentals, because in the short run, when you are looking to take a trade for maybe a week or a month or even 2 months, fundamentals hardly matter. It doesn't matter if the company is the most profitable company out there. So in the short term, fundamentals rarely matter, and only what matters is the sentiment. Right now, we are broadly trying to judge the sentiment of the stock by seeing how the stock is performing. So now, the first rule of swing trading is for you to identify sectors and companies with relative strength. So first, we are going to go deep into the sector. So for example, if you take between 2017 to 20, so pharma sector was not doing well, whereas banking sector was doing really well. So that time you try to focus more on the banking sector rather than trying to pick stocks from the pharma sector. Right now, if you actually look at it, IT sector is not doing that well, whereas the automobile sector is performing really well. So we can try to look at stocks from the automobile sector. So whenever you're planning to pick stocks for momentum trading or swing trading, the most important thing to note is that the sector which you pick should have relative strength, and the stock which you pick from the sector should also have relative strength. So this is the first criteria for selection of stock in swing trading. Always look for sectors with relative strength and stock with relative strength. This is the first criteria when it comes to picking stocks for swing trading, that is looking for sectors with relative strength and stock with relative strength. So always remember, when it comes to a car race, try to bet on BMW and not on Maruti. So next question would be, why would a stock have relative strength? Why is that Axis is performing better than Kotak? Why is that Persistent is performing better than L&T Mindtree? The simple answer to that is demand and supply. So always remember, any particular price is a fight between bulls and the bears. So if there are a lot of bulls or a lot of people who are actually buying the stock, then the stock is going to go up. And if there are a lot of people who are actually selling the stock is going to come down. So every single point is fight between bull and the bear. So if the bulls are able to dominate, then the price is going to go up. If the bears are able to dominate, the price is going to crash. So keeping this in mind, if the stock is continuously going up, it clearly shows that there are more buyers showing interest compared to sellers. On one hand, persistent systems is going up, which means there are clearly more buyers than sellers. And on the other hand, L&T is not going up, and rather it is consolidating. That means there are more sellers than buyers. Because if there were more buyers, the stock would have naturally gone up. This is a simple reason how stocks can have relative strength over other stocks. So once we have identified such sectors where a lot of money is moving in and some stocks which are performing really well, so now we have to plan for our important entry and exit levels. So this is nothing but the important support levels and the resistance levels. First, we'll try to understand what exactly is support and resistance before we dive deeper into the entry and way to exit our trade. So to keep it simple, resistance is a level at which there are a lot more sellers or people who are going to dispose their shares in large quantity, which is actually going to make the price of the stock come down. In simple words, let us try to understand what is resistance. Resistance is a level above which the stock finds difficulty in going up. So right over here, I have opened the chart of Reliance, And when you take a look at this chart, you can clearly see that Reliance is actually struggling to go above 2500, 2600. This is the zone where when Reliance comes closer to around 2600, there are immediately sellers who are selling and bringing the stock down. So these are important levels which you can see on a weekly chart, even on a daily chart, where the stock actually finds it difficult to go above. So whenever the stock is coming there are fresh sellers who are coming in, selling the stock and bringing the stock down. Similarly, support levels are the levels at which there are a lot more buyers who would come in and participate, and the stock would not go below this level, right? So Reliance is finding some excellent support around the level of 2000. So around 2050 to 2000. So whenever the stock is coming around 2000, the stock is usually bouncing back up. Now let us try to understand why exactly a stock will come down from the resistance and go up from the support. So now let us take a look at the chart of Reliance. So let us say after this fantastic rally in Reliance, there were some investors who actually booked their profits. So this is a good rally of 10 to 15%, and people who would have bought it earlier stage would have booked their profits, and because of this the stock ends up coming down. So to understand this better, let's go back to 2020 when Reliance saw a rally of close to around 100%. So you can see after this fantastic rally, there were certain investors who booked the profit. So what do you mean by booking the profit? So there would be a lot of people who would have entered 1,000, 1,100 and so on. So they will end up booking the profits right over here, because of which the stock ends up coming down. So you can see the stock clearly came down, and now this level stands to be a very important resistance. Why? You can see that after this particular swing right over here, so as we can see here, after the stock having this fantastic rally, from this point the stock actually ended up coming down. So whenever the stock next tries to go to this point, there will be certain amount of sellers who want to get out, because there is one set of sellers who have already gotten out. So there will be new set of sellers who want to get out of this particular counter when it retests this particular level. So again you can see the stock tried retesting this particular level. Again there were some amount of sellers who sold the stock, and third time you can see again it tried to retest, and there would be some more sellers who ended up selling the stock. And finally fourth time it tried to retest, but this time the buying was much stronger than selling, because of which the stock was actually able to break the resistance and go up. So you can see that every time it creates a resistance, so whenever it comes there next, people are actually going to sell some more. So you can see something similar is happening even now. So after this fantastic rally, so the first round of selling came here. So this happened to be a good resistance. Again one more retest, again good resistance right over here. Again one more test, good resistance right over here. And you can see that even after 4 retests, so this level of 2600 is acting to be a very strong resistance. So similarly on the downside, you can see whenever the stock is coming down, you can see that stock is finding support at the level of 2000. So one very important thing to remember is whenever we are actually breaking the resistance, the same resistance is going to act as a support. So whenever we are breaking the support, the same support is going to act as a resistance. So if you actually take a look at this level of 2000, which was initially a resistance for Reliance, started to become a support once this resistance was taken out. So once the resistance is taken out, so a lot of sellers who were actually selling at the level of 2000 will stop selling. So there will be fresh buyers who will look that, okay, the sellers are no longer selling, so let me start buying. And people who had sold will also see that the stock is going up, and they will start covering their shorts, which will further push the stock higher. So whenever the stock breaks the resistance, generally you get to see such fantastic rally. So whenever a stock is breaking the resistance, right? So there are 3 reasons why exactly the stock will go up. One, the sellers who are actually selling will cut down their selling, because the stock is going up. Now they don't want to sell it when the stock is actually going up. So the supply will reduce. So there will be new set of buyers who will see that, so no longer selling is coming at the level of 2000. That means the stock can actually go up. So there will be some fresh buying coming in. So both of this, that one increase in demand because of the fresh buyers and reduction in supply because of lesser number of sellers, is going to push the stock price higher. So that's why whenever we see an important resistance being broken, the stock generally goes up, and whenever we see an important support being broken, the stock continues to fall. And whenever resistance is broken, the same resistance will act as a support, and similarly, whenever a support is broken, the same support will act as a resistance. So these are some fundamental ideas which we have to have in our mind before we plan our trade. So this is the second part, understanding support and resistance. So we also understood that when resistance is broken, why exactly the stock will go up and how exactly resistance itself will turn into a support once broken. So this is the second fundamental thing what you should know in swing trading. So the first thing is always try to find stocks with momentum. The second thing is try to look for important support and resistance levels, right? So in this case, for Reliance, the important support and resistance level would be 2600 and 2000 on the lower end. But unfortunately, Reliance doesn't qualify for a swing trade because there is no momentum. So as we can see from almost 1.5 years, the stock is simply consolidating and there is absolutely no momentum in the stock. So the first criteria is not met. Even though we have a clear support and resistance, we are simply going to ignore the stock very simply because it does not have the relative strength what we look for. So now I'm going to give you some examples of stock, how you can actually try to identify them and how you can plan your trade. Now let us try to understand how we can plan our trade with some case studies. So here I have opened the chart of Varun Beverages Limited, and you can see that this stock is clearly in a very strong momentum. The stock tries to consolidate and clearly hits a all-time high. One more thing what you can consider to see if the stock is in momentum or not is simply that the stock generally makes higher high and higher low. So the pattern would be something similar to this. So every time it breaks its resistance, goes up higher, again comes down, again makes a new high, again comes down and again makes a new high. So this is a pattern of higher high and higher low, and you can see that every single high is more than the other and every single low is higher than the previous low. So this is a clear pattern by which we will get to know that the stock is having momentum. And you can see with respect to Varun Beverages, we see a similar pattern. The stock has seen a fantastic rally on the upside. So once we understand this particular stock is having momentum, now it is time to mark our important support and resistance levels. So right over here, if I have to mark the important support and resistance level for Varun Beverages, so I would keep the initial support at 860. So because you can see this was the earlier resistance. So once this resistance is taken out, the resistance itself is going to become a support, and the resistance at 950. So there is a resistance at 950 and there's a good support at 859. So we'll just first work on marking the important support and resistance levels, and then we will plan for a trade, right? So next I will also open IDFC Bank. So when I open IDFC Bank, so this is a weekly chart. So when you look at the daily chart, so again you can see the pattern of higher highs and higher lows. So the stock comes down, goes up, comes down, goes up, and it is right now consolidating. So again you can quite clearly see the stock is having very good momentum, and we can consider planning our trades in this particular counter. So before we plan our trade, it is very important for us to mark the important support and resistance levels. So I would urge you to mark the support and resistance either on a daily chart or a weekly chart. Don't go anything below daily, because when you're planning to hold the trade for, let's say, a week or month or so, it doesn't make any sense to go for any time frame below daily. So the least you should be looking at is at least the daily chart. So when I have to mark the support, I would be simply marking at 89. So why exactly 89? You can see here. So the stock consolidated here for quite some time, finally broke, and once it broke, it has taken support around the level of 89 couple of times. The stock is also showing a lot of relative strength by forming the pattern of higher high and higher low. So this is a good trade which we can consider. So 89 is the support, and important resistance would be coming somewhere around 9900. So this would be the important resistance level, and this would be the important support level. So now we'll be looking at the last stock, which is Titan. So again, if we were to mark the important support and resistance, so I would mark something like 3150 as the important support level and 3300 as the important resistance level. So these two are the key factors which you have to consider while planning for the trade. One is the stock should be in momentum. So this is clearly in momentum because it is making higher high, higher low, and stock is also almost at the all-time high. So if you see from March 2023, so the stock has clearly made higher highs and higher lows, right? So now we have identified three stocks. So let us try to plan our trade in these three stocks. So whenever we are planning our trade, we have to try to consider what is known as the risk to reward. So we already know that there is a higher chance that if the stock is either breaking the resistance or coming to the support, there are higher chance the stock is going to go up. The probability can be 50% or maybe slightly higher than 50% that the stock is actually going to go up when it hits the support or breaks the resistance. On one hand, you have a probability which is on your side. So you have already made sure of that the trades you are taking is coming with higher probability. The second thing what we have to focus on while we trade is the risk to reward. So whenever we are taking the trade, we have to try to make sure that we have a favorable risk to reward. So since we have a probability of 50% or little over 50%, so if we are planning a trade with 1:1 risk to reward, then it makes no sense. So one trade I am going to win, other trade I am going to lose. So I'm almost going to win or lose the same amount, leaving me with nothing. So whenever I am actually trying to plan a trade, I should be looking for risk to reward of well over 1:2 or 1:3 at least for me to get a favorable trade. So now if I were to plan for a trade which is 1:2 or 1:3, I will simply look at Titan. So I see that, okay, Titan has a very good support at 3150. So right now Titan is trading at 3166. So that means I know there is a very good support with just 20 points lower. So if I keep a stop loss or a daily close below 3150 or 3140, let's keep 30 points, right? So I'll be looking for a stop loss below 3140 because that is a support. And if it is breaking the support, there are higher chances the stock is going to go down. So let's try to exit the trade below 3140. So I have hardly a 30-point risk, and now I have to look for rewards which is 1:2 or 1:3. So do you think can I get a reward of 1:2 or 1:3? So I am trying to risk 30 points right over here, right? So around 30 to 40 points. Whereas when I actually look at the reward, so I can potentially look for rewards of around 140 points because it can try to retest its previous resistance, right? So whenever it comes closer to resistance, it is usually going to face some kind of selling. So for a 30-point risk, I have 140-point potential reward. So why am I telling potential reward? Because the stock can further end up breaking and going higher. So this is a fantastic trade to take because I have a risk to reward of almost around 1:5 and a probability of 50-50. So now similarly, when we take VBL, so VBL right now, as you can see, is neither close to its support nor close to its resistance. So we can simply avoid the stock because if I am actually taking a trade here, I should keep my stop loss below 850. So if I am actually looking at VBL and if I am entering at this point, I should keep a stop loss below 850, which is 60 points. And on the higher end, I really don't see a 60-point reward, which means it's a clear avoid. There is no need to take this particular trade right away. Rather, we can wait for it to break the important resistance so that we can get a better trade. So once it is breaking the level of 950, we can simply try to keep a stop loss below 950 and look for higher risk to rewards. So here, one thing what you can see in the first trade, the stock was in momentum. We identified the support resistance and we found a favorable risk to reward trade. In the second trade, what happened? We found the stock was in momentum. We identified the support and resistance, but at this point, we found the risk to reward was not favorable. So we avoided taking the trade. Now we will come to the third stock which we have identified. So this is IDFC Bank. So in IDFC Bank, so you can see that the support is coming around 89, which is hardly around 2 points lower from here, right? So when you actually look at it, so you would be closing the trade once the stock closes below 89, which is potentially 2 to 3 points. Whereas on the higher end, so you can be potentially looking for rewards of close to around 6 to 7 points. So is it favorable? yes, it is favorable because it gives 1:2 risk to reward. And in case if the stock is breaking 98 and tends to go up, you are going to get easily 1:3, 1:4, or even up to 1:5. But the best trade amongst the three is obviously Titan because the risk to reward is most favorable right over there. So now you might have got a simple idea about when exactly you can enter the trade and how exactly you're going to place a stop loss. The second thing is when exactly are we going to cut our trade? So where should be our target? So in my opinion, you shouldn't be actually having a target for stocks having momentum because there are a lot of stocks which have easily gone more than 100% when the stocks are actually in momentum. So for example, you can take a look at IDFC Bank. So from 30, it has gone to 90. BBL has gone from 200 to 900. Similarly, you have a lot of stocks which have actually gone well over 100, 200% when they're actually in momentum. So rather what we can do is that simply trail our stop loss. So let us say the first entry for us in VBL was taken, let me say somewhere around 2022 when it was trading around 300 rupees, right? So I will end up taking the entry once this important resistance is broken above 340, and here I have taken an entry. So you can see that I am going to simply keep a stop loss below 340, and the stock surprisingly never closes below 340, and now the stock tends to go up. So from here, after consolidating for quite some time, the stock starts to go up. So now I can simply start to trail my stop loss to 390 because I know for a fact that the resistance itself is going to turn as a support once it is taken out. So now I have trailed my stop loss to 390, and you can see the stock further consolidates and shoots up. So now again I am going to trail my stop loss from all the way from 390 to the next resistance, which was 442. So you can see right over here, the stock tried to consolidate around 442. I'll be trailing my stop loss to 442. So you can see right over here, you had got your initial entry at 330. Now your stop loss is already at 442. So again, what we are going to do is keep 442 as a level of reference. And now our resistance would be somewhere around 519. So right over here, so you can see that the stock actually went up, then it started consolidating right over here and finally gave a breakout. And unfortunately, this breakout was not sustained right over here, even though the breakout was given. So you would have trailed your stop loss to 515, but unfortunately, the very next day you get an exit around 500. So you have basically trailed your stop loss all the way from initially 330 to 500. So you have got fantastic 60% gain with this simple momentum. So you can see that after that, the stock fell down, again consolidated, broke out, and then it continued to rally. So you could have simply taken your exit and you would have missed most of the rally, no doubt about it. So this is just at 500. Later, the stock goes on to go to almost around 600, 700, and all the way to 900. So you would have missed the majority chunk of the rally, but still you would have made close to around 60%. So this is the third and the most important factor, that is the risk to reward. I think now you would have got a fair idea on three important factors to consider. One, the stock should have relative strength. Two, identify important support and resistance. Three, look for risk to reward. And four, start to trail your stop losses. So this is the fundamental concept of entire swing trading and how you can practically do it. We have also taken a lot of entries in BSC, Sula Vineyard, Kirloskar Brothers, Apollo Pipe, Tata Power, IDFC Bank, VBL, and much more based on momentum, where our average exit has been 1:3 or 1:4 with 42% probability. This is a basic framework based on which you can actually end up doing swing trading. So that is, identify stocks with relative strength, try to mark support and resistance, and once the stock breaks the resistance or comes closer to the support, try to pick the stock with favorable risk to reward and then trail the stop loss. So this is as simple as it gets. So I hope this swing trading beginner's guide was useful. If you have found this content valuable, make sure you hit the like button and share this video with all your friends. So also subscribe to my channel and hit the bell icon so that you get notified every time I release a video. Thank you so much for joining.